Before we begin, I would like to say the following, that Kindred, of course, joins the UK and the Commonwealth in mourning Queen Elizabeth II. And we pay tribute to her long service and send our condolences to the King and the royal family. As Patrick said, my name is Henrik Tjärnström. I'm the CEO of Kindred Group. We're really delighted to have you all here today and for us to be able to explain in more detail why Kindred is so well positioned to continue to outpace market growth and at the same time continue to deliver superior shareholder value. We will today walk you through a lot more detail on the core strategic initiatives that will create value over the coming years and will take our EBITDA margin back over 20% over the coming years. Me and my experienced team really look forward to take you through that during this afternoon. And again, a warm welcome, and let's dive into it. Many things can be best described in phases, and for us at Kindred, that is also well suited to our history. For us, it's humbling and also honoring, as Patrick said, that 25 years ago this autumn, my best friend, Anders Ström, moved from Sweden to the UK, registered Unibet as a company and applied for a UK bookmaker's license. The rest is history, as they say. Well, if we're trying to summarize those 25 years in only a few minutes here, and for us, and looking at this from this perspective, we have grouped our company's history into three distinct phases. First, we have the build-up, and then followed by the transformation, and now we're on the verge of the scale-up phase, as Patrick was also alluding to. We've been through the different phases of our industry, and we know what to expect from each and every one of them. From the inception, our first 10, 15 years during the build-up was really a lot about establishing a foundation and very much focusing on gaining market share and laying that foundation. Interesting to note that this is also very similar to the phase that we've been in the North American market now for the last couple of years. During this phase, it was indeed a lot about geographical expansion, but also product addition and innovation. We started as a sportsbook-only company in '97, and it was only in 2003 that we added casino and games and poker in 2004. And then we gradually invented in the product area with adding live betting, streaming on sports, and bingo and other features as well. After the transformation came the build-up phase, after the build-up came the transformation phase, when we've really been seeing for the past 12 years that the sector has been going and moving towards a locally regulated reality. For us, we saw that firsthand when many of our markets started to move in that direction. But it was really in 2010 when we had this French re-regulation that we really learned a lot and how we would prepare for this going forward. And we're also seeing that this trend was likely to start spreading across other countries in Europe and could indeed also spread outside Europe to continents like the North America, which indeed has happened since then as well. This was the start of our transformation journey that we've been on since 2010. We saw clear challenges coming from the transformation, but we also saw great opportunities if we could master the challenges ahead and better than our competitors. In turn, we would gain long-term access to fast-growing markets with more predictability and hence lower risk. Re-regulation is challenging, but at the same time, it also offers great opportunity in a sense that it raises entry barriers, which leads to reduced competition. Now that we have passed the transformation phase to the largest extent, especially when we passed one of the final major milestones in the re-regulation of the Netherlands, we're really focused on scaling up where we are and really continue to outgrow our existing markets. You will hear a lot more from Niels, Anijab, and Neil on that in their section. The margin pressure that's coming and inherent in the transformation puts greater focus on operational excellence. And to ensure profitable growth, we have Johan and Marcus that will talk a lot more about scalability and efficiency in their section. But to do this as well, we target unique products and content and customer experience. And here you will hear more from Simon, Ben, and Eric in their area. We know what it takes to be profitable in locally regulated markets. Sweden, UK, and Denmark are all recent examples of that. But Neil will talk much more about the UK and our success story there over the last couple of years. I'm sure you've seen this morning that we issued our press release introducing financial targets for 2025. As you can see, key elements of those are our revenue and EBITDA margin developments going forward. And Johan will again talk about that in his section. Key for us, since we embarked on our transformation journey 10 years ago, has really been a strong focus on growing our locally regulated markets faster than our .com markets. And that's indeed what we have done as well, to ensure that our foundation is as strong and as large as possible. As you can see on the graph on the left-hand side, we have grown our locally regulated markets between 14 and just under 30% over the compounded annual growth rate over the last 5 years. Key milestones in that journey has been the re-regulation of Sweden in 19, but also the recent Dutch re-regulation, but of course also our growth in UK, France, and Belgium. Our dedicated teams has been a successful framework around how we adapt to these local regulations and how we manage them in the best way possible. And to make sure that all important areas like compliance, tech, and local teams are as aligned as possible to ensure that we can come into the market as soon as possible and be as ready as possible from the get-go. As a matter of fact, we have grown faster than the overall markets historically and have a very well diversified geographical revenue base. Again, Nils Anijap and Neil will talk about that later. We focus on locally regulated markets because they offer carry lowest risk and hence are more sustainable. We now have about 80% of our revenues coming from locally regulated markets. And again, as you saw this morning, one of our ambitions is that that number will move up towards 90% over the coming years. An interesting observation is that we don't have to be a top 3 operator in our markets to be highly profitable. We've shown that in both the UK market, but also in Sweden. And we still have plenty of growth potential in our core markets. And for us, North America is an exciting opportunity. On the right-hand side here, you can see a graph that we have frequently in our quarterly presentations. That's showing our ability to absorb the margin pressure coming from the transformation. A consequence of growing our local regulated markets fast is that betting duties are increasing rapidly. This has meant a material contribution to societies in betting duties alone. And as you can see on this graph, we're close to or just under £300 million in 2021 alone. And we have managed that well with a plan of cost efficiencies across our line items in our P&L. But this is also what we anticipated already back in 2010. We saw that if we wanted to transform the business from .com to .country, we needed to grow top line very fast and even faster than the betting duties so that we could create absorption ability and also keeping our other costs under strict control would really help us to deliver a relatively stable EBITDA margin that we've shown over the years. We naturally see a dip at times of larger markets going through re-regulation, but we also see a strong recovery like we showed in 2020. And this time now will be no different with the Netherlands. And this you will hear more from Anijap and Johan in their section. If we look at the macro trends and spend a few minutes on that in our sector, and that will in one way or another impact us as a business, both on a macro level but also on an industry level. Looking at our current environment from a wider lens, a macro perspective, I see a number of trends that will influence the direction we are taking as a company. Our sector has gradually become an integrated part of society, and that naturally leads to more attention, but also regulation. In our last Capital Markets Day that Patrick was alluding to, we talked a lot about our foray into automated data-driven decision-making based on big data and artificial intelligence. Of course, these are now underlying trends that permeates everything we do as a company. And you will hear more from that in the different areas in the afternoon. If we start looking at the digitalization, that transformation has been going on for decades, but it's really only in the last 5 to 10 years that it's fundamentally changed the way businesses operate, the way consumers behave, the way regulators engage, and the way policy formers act. Products and services are now more accessible than ever before, and borders don't exist in the same way, as a global service is literally only one tap away. Consumer demand has changed, expecting a highly personalized and instant offers. And for the customers of today, of course, speed is everything, and attention span is shorter than ever before. Trust has grown in importance, and they're also a lot more socially aware. If we look at globalization, it's really spreading, and where national has become international and now global, and we have the world at our fingertips. And that leads to greater understanding of other markets and cultures. As we've seen recently, economies, logistics, and productions are nowadays completely interlinked, and we all experienced that over the last couple of years and the challenges that brings. On ESG, social expectations on individuals, organizations, and countries has increased, as we've all become more aware thanks to the digitalization. Regulators and policy formers increase regulation and governance to maintain control in a reality that is evolving faster than ever before in history. And consumers and talent indeed expect a lot more from the organizations they engage with or indeed work for. If we address this a little bit more from a close-to-home perspective, you can see a number of trends in the online gambling space over the last couple of years that will continue to shape our industry. We have watching these trends for many years and started to prepare many years ago with decisions, sometimes difficult, but also very conscious decisions made. We realized very early on that what took us here will not necessarily take us there. And the past 3 to 5 years have really accelerated this transformation. And we are now coming out on the other side, stronger and more prepared than before. If we look at the market growth, a key underlying trend in our sector has been the migration from offline to online, and that growth opportunity it brings to us as an online-only operator. H2 Gambling Capital still see a great growth potential for the online gambling sector, and they anticipate that the online element is still only accounting for just over 30% of the total gambling market in 2021. Again, according to H2 Gambling Capital, they estimate that our growth total addressable market is estimated to show a growth, compounded annual growth rate of 10% between 2021 and 2026. When it comes to content control, the greater consumer demand and for personalized content requires greater control of the product and the customer experience. For us, KSP and Relax, or Kindred Sportsbook Platform, and Relax are key initiatives in this crucial area. Again, you will hear a lot more detail in this exciting space from Eric, Ben, and Simon in their section. And we look at market consolidation. Competition and consolidation in the industry is increasing as operators with strong performance and balance sheet are taking more control. We have actively participated in the consolidation of the sector, and as you can see here, we've executed on 15 transactions over the last 16 years. We are one of the largest operators globally and have a very strong balance sheet, and our ambition is to remain a consolidator. On sustainability, we're proud to say that we have a market-leading approach to sustainability. Regulatory and political pressures puts greater focus on sustainable consumer database, which in turn lowers risk. We're leading the way in transforming gambling through our Journey Towards Zero initiative, where we set a firm ambition to take ourselves as close to 0% of revenues from high-risk customers towards the end of next year. And we're well on our way to get there, but of course it's a big task to get all the way down to zero. Our share of revenues from high-risk customers stood at 3.3% in Q2 this year, and that number 2 years ago was 4.7%. So we're moving in the right direction, but we fully appreciate we have a lot of work to do. Our share of customers who is showing an improving behavior after detection in our own systems has been also increasing over the years, which is very positive, and that number now stood at 85% at the end of the second quarter. The developments in the industry over the last years, the macro dynamics we're all experiencing, and the online gambling industry trends we just talked about are all considered in the current strategic plan for Kindred and the direction we are taking as a company. Our purpose is our North Star, and our strategic plan is underpinning our purpose to transform gambling by being a trusted source of entertainment that contributes positively to societies. This is a picture showing our current strategic plan that we've shown in recent quarterly presentations, but also we talk more about in much more detail on our corporate site. We have 3 elements that's underpinning our commercial efforts, and that is a strategic focus on unique product and CX, a sustainable business, and a scalable operations. On top of these, we have a balanced portfolio of markets with plenty of growth potential in our core markets, and our early entrance into the Netherlands is a great example of that. And we're putting our fundamentals in place in North America and are now focused on rolling out our platform, building our brand, and then scaling. We maintain our focus on shareholder value creation through profitable growth and strong profitability in locally regulated markets. We make money. You will hear a lot more detail on all these different initiatives during the afternoon, but the most important strategic priorities for us to drive value for the company and for you as shareholders over the next 5 years are the following. To capture the existing growth in our core markets and continue to grow faster than the overall market. To ensure we become a market leader in the Netherlands, which we're already well on our way to achieve. And to utilize the cost efficiencies and scale that our proprietary sportsbook platform will bring and is progressing well. And to provide customers with the unique and differentiated content through the highly profitable Relax business. And to further build our presence in North America, where we now have a base in place to capture future value. You will now hear more from our experienced team on how these 5 important strategic priorities are developing during the afternoon, and I look forward to welcome you back and answering your questions at the Q&A session later.